YouTube, Murphlow's FX here. It's Friday, October 14th, 2022. Just a quick recap about yesterday. Price came down to the fair value gap, body respected. Then news hit, we rushed up into another fair value gap on the 4 hour right here. Had a nice reversal. Price then consolidated, we came back up. We're currently bouncing off another fair value gap. I'm not saying that this one is a complete reversal, that we can't still go higher, because I am still bullish on the dollar. But it's Friday, end of the week, don't expect too much. Now I did take a little short right before the 8:30 news, about 7:30 I took it in the pound. And I'll bring that up here. There we go. So as you see, at one lot, took about 56 pips. And I'll just show you quick what I was thinking. So at 14:30, which is right here, and it was really just above the low of the candle, so 46. I looked at it like we had an institutional order flow entry drill that I missed. I wasn't in front of the chart at that time, so I wanted to see price bounce off of that and continue lower. I had my stop pretty much right here. If it was going to come back up, I wanted to see 50% of the range be respected, which did happen. I did go about, 8 or 9 pips in the red. Yeah, I guess 10 or 11. And then we got, I think it ended up going 70 pips in my favor. Almost 80. But because it shot down so hard before news, I didn't wait to see if the take profit would get hit. Plus, it's already been a pretty big range day. And I usually don't trade Fridays, but I had a profit split day yesterday, and I got my account today. And I always like to take a small trade on the first day they give me my account, because the soonest that I can take a profit split day is 15 days from the day that you open up your first trade. So I was only risking, $220, and if it went down to my take profit, it would have been 1,100, so 0.5%. So here I closed in 0.25%. On these types of trades, obviously, I don't want to lose. But even if it did hit my stop loss at $220, it would have been really nothing against my equity. Not sure if that's the best way to go about it, but that's how I go about it. Now, these videos, I've been talking a lot about fair value gaps. I think, for me personally, price reacts off those in a better way than order blocks or rejection blocks or optimal trade entry. The fair value gaps give you an opportunity to have a nice, at least bounce, and then you can look into order blocks or optimal trade entries to verify your trade. Like down here, that's another fair value gap. If next week we get a drop down into here, I would expect some kind of bounce. And I can use that to frame, even if the dollar only gives you 20, 30, 40 pip bounce off there and we continue lower, if I believe that there's going to be a bounce in here, I can capitalize on foreign currency and selling it at the same time that we're getting a bounce in here. It's not about getting a 150 pip move and having the direct bias. It's just about knowing reversal points potentially and capitalizing off of it. That's really all I try to do. So right now, the way that I would look at this, if it wasn't a Friday and it was the same time, New York session, I would expect to see this area here have a reaction in it, because we've been driving lower. We don't have anything over here that tells me, oh, we should have some kind of reversal. Yeah, we have a little fair value gap here, but we have lows where stops are going to be. We've got that fair value gap down here. So I would be looking to see if price has a reaction off here on the 15 minute, and if it does, I go into a 5 minute and see if I can get some kind of let's say this candle closed here, then the next one dropped lower. I've got a fair value gap that I could trade up into to go lower. It really just depends. You got to see how the candles form and what you get. So I really wanted to kind of show that little winner I had. Again, it's nothing crazy. It's not thousands of dollars, but if we go back and you look down here, we took the trade at 14.30 and then we got out at 14.50. So in 21 minutes, I scored $560. Again, it's only 1/4%. Normally, I'd like to be risking 1.5%, and I'm looking to get 3, maybe 4% on a trade. After you do your partials, it's usually more like 2.5 to 3%, which on an account, of 200,000, hey, that's 4.5, 5, 6,000, which is a nice little penny, as I like to call it. So if you were in the market this week, I hope you profited. Hope you didn't get smoked. Hope you have a safe weekend. Don't get arrested. Don't get hurt. We'll see you on Monday.